I'm Victor Cantore. I'm the president and CEO of AMEX Exploration. Our project is in the province of Quebec. We're right in the town of Normétal, which is just north of Noranda, and we're proud to have disclosed our updated mineral resource estimate last week. Now we're up to 2.3 million ounces, and including 1.6 million in measured and indicated, and we also have a high grade zone of which is now called the Champagne Zone, 831,000 ounces in there at 6.2 grams.
Hi, I'm Dan Noone. I'm the CEO of G2 Goldfields. We trade on the TSX main board under the symbol GTWO, and on the OTCQX under the symbol GUYGF. We have a high grade discovery down in Guyana. Our discovery was 2019. In March this year, we put out an updated MRE of a combined 3 million ounces, about 3 grams a tonne. We've made a new discovery since then in the Oko North area, which we're drilling away at the moment with 3 rigs, and we hopefully have another updated MRE by the end of this year.
Guys, thanks so much for joining us. Victor, good to see you. Dan, good to see you. I think you've both just come back from the New York conference. How did that go? What were people interested in finding out? I mean, I'll start with you, Victor.
Yeah, it was pretty good. So the conference was actually just outside of Las Vegas.
And, Vegas, sorry. Apologies, my fault.
Outside of Las Vegas. And it was the Canaccord conference. The vibe was really special, like especially the precious metals or companies like Dan or mine that actually have a resource, and it looks like we're moving forward and increasing the resources. Yeah, the vibe was really good. We had a lot of meetings. Our meeting schedule was full all three days.
Oh, for sure. We had a full dance card as well. 23 meetings, which is always good. Lots of institutions, probably half we knew before, and new half institutions out of Australia and Asia, which is sort of one of Canaccord's advantages. So no, it was very good meeting. Very up vibe on the gold price. And certainly people still think the market has a long way to go.
Right, and do you think that the people that you had conversations with sort of would characterise the kind of current macro environment for gold as positive, or is there still a slight disconnect in terms of those equity valuations? I'll go with you again, Victor.
Look, every time, like we're trying to put together a plan to get into production as fast as possible, because I say, I've been saying, the next couple of years, 2-3 years, like I think I've got a pretty good idea where gold is going to be at. I don't know where gold's going to be in 2030, and the minute I would say that, they all say, "Yeah, we know where it's going to be. It's going to be much higher." So it's very, very positive. Even though there I am trying to be conservative on where the price of gold is going to be at. So it's very good, very positive.
Yeah, I think it is, and we had sort of the same vibe there. It's basically, people saying, don't be in too much of a hurry to get to production or sell, but basically keep finding more ounces. The gold price is going up, with the US dollar and all the craziness going on in the world markets at the moment. Everyone sees the gold price going stronger this year, and they got silly numbers. Some of these guys, $8,000, $9,000, $10,000, but they can all see $3,000 for a long time here and going to 4 or 5. So it's a very positive market for gold.
And how would you kind of characterise both of your business models? Because I think expectation for you, Dan, is that this is right for someone to kind of come in and do what was already happened near you, a bit of M&A action. You're just kind of setting it up for someone else. Do people want you to do that? Does that still make the most sense at these sort of prices of gold?
Yeah, generally, I mean, the question we always get asked is, when are you going to do something with your neighbour? And they get asked the same question. But it's like, we're still in the exploration phase. So the new discovery at the Oko North is great for us. Long term, I mean, the logic here would be it'll get built into either as a standalone, plus 5 million ounce deposit, or someone may merge it with the thing to the south of us, or something may happen. But in general, we don't pitch ourselves as builders. We've always said we've done that once before with the Aurora deposit. And then 6 years later, we lift our head up and go find something else. And this time, we just want to drive ahead exploring. So that is our model. And we've always said we'll just do MREs updated, and at some point in time, we'll find a transaction. A lot of people are pushing us for real numbers, like PEA numbers. We've done internal scoping studies. We sort of know what those numbers are. I can't mention them in public. But, if we get to past the next MRE and people are still requiring that, we may have to do something like that next year. But in general, we just like to keep exploring with the concept that somewhere down the road here, we'd be able to find a transaction with people who are well educated enough to be able to figure out what the value of the asset is.
But you're not frightened of kind of missing the cycle in the sense that, you know, okay, some people talking about $8,000-9,000 gold, others talking about, you know, $3,000 gold being more than adequate, and of course it is impressive. You're not in any rush to offload this. You feel that at the moment you can raise capital when you want, you can keep on drilling, you can keep building this thing out, and in an M&A environment like we are, you've got time on your side, do you?
Well, we're always wary that, you know, these cycles go up and down, there's no doubt about that. I mean, whilst we're making discoveries, we're happy to keep driving the size of the deposit. You know, at the start of the year, we announced we're going to spin out G3 and G2 would transact. And then you know, executive chairman says, that's still anomaly just north there, go put 4 holes into that before we pull the trigger. And then that was the new discovery, now on hole 37. So it's, but that is delayed in our spin out of G3 because we will include that area which was going to be in G3 back into what will remain as G2. So G2 will now be more about like 25,000 acres instead of 12. But in general, the concept is still there. Basically, carve out G2, drive ahead with you know, the work which will allow it to become permitted as quickly as possible. And that's the environmental baseline, more metallurgy, that sort of thing if we have to, a PEA next year. But in general, we'd like to think that will be carved out and that will be up for sale. Whereas the other 60,000 acres plus the new things we're adding on will then become G3, which really is just a continuation of G2. You know, our model is we find things, we'll package them up, off they go, and we'll keep doing that. Because the opportunity in Guyana at the moment is that it really is underexplored. We have a lot of land there, we have the ability to get land, and so that's our ability. And so we'd like to stick to our knitting with the knowledge that we still have to make the package for sale presentable to whoever wants to buy it. And if they're buying brown shoes today, we'll give them brown shoes. If it's black shoes, black shoes. And if it needs a PEA, it'll have a PEA. But we're not threatening. The danger of PEA for us was always people will think we're going to build it. So
there is, well, Victor, you know a little bit about that. You've got a slightly different business model. You did put out a PEA, and tell us about that.
Yeah, slightly business model, but I totally agree with exploration. So we're going on a dual path. Exploration is still keeps going, but I wanna definitely at least try to put this into production. I mean, it is a very highly profitable mine. Well, highly profitable here. Sorry, I got to give all the waivers over here. It's not an operating mine. I'm sure the regulators will listen to this. The numbers look very compelling, basically. So we did put out a new PA. We did put out a new resource, and now we're going to put out a new PA to back it up. And you know, I like both strategies are great. I mean, yes, we definitely want to continue also growing the resource, and at the same time, we want to show that it's actually economic. And then again, you know what? And you know, the majors, you know, the big producers, they do their own math anyway. So even if you don't have a PA, they do their own internal numbers. Anyways, we're just giving them an easier time when we actually provide them with a PA, because then they could just go through it. I like that strategy because where we're located, you know, it used to be a past producer there. You had the Normétal mine, and you know, you have a town that used to have 4,000 people. Now you're down, you know, you're down to about 800. But you have the town of Lihir, which has got 12,000 residents just south of us. So we're trying to package it in a way to show it, you know, that look, this can be a mine, it can be put together. You're in the province of Quebec. There is, you know, there are rules to follow, and you just follow them, and you know, you achieve every milestone and show like how quickly you can put this into production.
So I mean, I'm just looking at the market at the moment. We're seeing a bunch of companies, you know, change their business model to look at getting into sort of nearer term revenue situation. I mean, Victor, you're looking at that as part of your model. Do you think there's been a sort of have investors' expectations shifted in this cycle, or does it just depend on the type of project that you've got? Did you feel forced to kind of change your model at all by the market?
No, I think it's the type of project. It's really the type of project that I have. You know, when you look at the high grade zone, for example, which we call the Champagne zone. You know, you can access that. You can access that with a portal. You know, with the decline. it's you're looking at probably half an ounce what you're mining. Yes, there's going to be dilution there, but it's so high grade that you definitely want to take advantage. You definitely want to take advantage of this market. So at the end of the day, you're what you're trying to do is you're de-risking it as you're going forward, right? You keep the environmental studies. You got to start those. You got to put together a feasibility study. You just move everything forward. Eventually, somebody's going to buy you. That's what usually happens. That's what usually happens to the juniors when you move it forward. I'm taking a slightly different approach. I'm showing like, look, it's not just a resource here. You can actually mine this thing. So that's what I'm trying to show the market that we can move forward. We did bring in mining people. We brought in Jonathan Gagne. He was at the Greenstone mine. He was one of the engineers at the Greenstone mine with Equinox. We're gonna bring in other mining people also, and that doesn't stop us from continuing. We do have a lot of geologists on staff, and we definitely wanna. We have 197 square kilometers to explore. We had recently brought in that new land package which increased it by 150 square kilometers. So we're really excited on moving forward on both paths. And if you don't get bought out by then and you are in production, then I'll get into a real aggressive exploration program to try to limit the dilution. At that point, you do it with your free cash flow.
And how do you view that, Dan? Obviously, look, you've seen your market cap, really kind of go on a bit of a rip for the last 12 months without necessarily putting out a economic study. Are you benefiting from the activity of people around you, or do you think that the simplicity of what you're trying to do is always going to be in demand? I mean, how do you view this run that you've been on?
And I think we are in a unique situation here with our neighbours to the south of us putting out a PEA, getting taken out by G Mining. So there was a number put on the value of the asset when G Mining bought Reunion. We had Anglo Gold come in for 15%, which put a sort of a stamp on the project saying, okay, this is fine, it's potentially Anglo size. So those two things were unique in that regard, and to have something, we've got 2.5 kilometre strike length, they've got 2.5 kilometre strike length. You put them together, this is going to be an exceptionally large deposit. There's a number of little things happening out here which we didn't put in place necessarily, and we don't control either. So, it is unique. If we were off on our own in the middle of nowhere, I think it'd be a little bit harder running down our path. But as it stands, you take advantage of the things that are given to you, and for us, it has reflected our share price. There's no doubt about that. I think Victor's on track in Quebec, because what his advantage is up there is that he's in a mining town. There's no doubt about that. And so that consolidation there, can you mine there? Is there a neighbour there who'd like to put it together? Absolutely, there's mills around there. So, I mean, it's horses for courses to a degree, right?
Well, I think with central bank buying for the last couple of years and maybe some brick de-dollarization efforts, perhaps you're definitely both in the right metal and the right commodity for sure. But does any of that sort of sway or influence your thinking, or are you looking just purely at the fundamentals of your respective projects and just looking towards the medium to long term? How do you come at this, Victor?
It's definitely gold. We're definitely moving forward with gold. I think gold's going to do very well. I think it's going to do very well for many years. We are in a unique situation also. That is a VMS belt. It's the past producing mine that was there. It's just 4 kilometers east of us. It was a copper rich mine, but again, all resources are basically staying on. We're fully focused on gold, and that's something that we'll look at later, whether it be us or somebody else. I had them poke. They really wanted to poke holes there. We let them poke holes. They were getting the same type of numbers that they were getting with what the Normétal was at, the old Normétal mine. But I think it's important to stay focused, increase the ounces, and just keep moving along. Gold is going to do very well.
Right, and Dan, what are your thoughts on when you sort of do look at sort of outside a little bit, when you raise your head up and look over the parapet, in terms of does inflation continue to impact producers' ability to drill economically? Does that impact on your valuations? is there going to be enough money around when you need it? I mean, it's hard to argue anything negative at the moment, but I'm just trying to work out what might be coming and what maybe I should be looking out for in a high price gold environment.
Yeah, I'm with you. I mean, basically gold is a reflection of inflation, and it sort of caught up and maybe pushing forward looking. The inflation hasn't really come at us in oil or any of the other materials yet, but you can guarantee, a good suit will cost you $3,000, an ounce of gold every day, right? And so those costs will catch up and probably overshoot again. But at the moment, we're in a pretty good spot. It won't last forever. But the gold producers are making a lot of money at the moment. So, and I think there has been a slight structural change in the gold market with the quasi-de-dollarisation of trading around the world, and this fear that, you can't have all your central reserves in US dollars. And it is being driven by the banks. It's not the North American market, and it's not mum and dad sticking gold under their pillows. It's really central banks buying gold. And that change in reserves and how much of that will be gold, it will affect the price of gold. There's no doubt about that. And I think we're catching up on a lot of inflation. And so I think we'll have a good run. But you always know that costs eventually catch up. There's no doubt about that.
Right. Victor, I mean, you must look at the economics of the economic horizon as well, doing what you're doing. What are your thoughts?
Yeah. Well, you know what's interesting when you look at both these projects, you look at Dan's project and my project. Like what's really interesting, and it's whether it be a good gold market or bad gold market, it's high grade gold. High grade gold will always survive, and I mean, obviously, I want a high price of gold, but the high grade is high grade, right? It's king, and Dan's got high grade there. We have high grade. It's really what's gonna. We will be able to feel to survive anything anyways, but we're in a good gold market. Like you were saying before, it's hard to say anything negative. I mean, I still think gold is going up, keeps going up and up. Like, when I start hearing people with their, a gram and a half, and they're saying they have high grade gold, that means Dan and I have ultra high grade gold then. It's quite impressive.
If I may, just in terms of the money side of things, it's been tricky 4 or 5 years, quite frankly, for juniors. We've seen some of the big funds, exiting, left, seeing a lot of value destruction in this space. You guys have always found it. Well, I'm going to say from the outside of this, it looks like easier to raise capital. I'm sure you will always complain about the cost of the money, but it's you've got it when you've needed it. With your strategic investors, with the type of money that you're getting in here, do you think that's do you think that world is changing? Is it just the good projects which will sort of have access to the money? Do you think we'll see a lot less projects getting funded going forward, even this high price gold environment?
I think right now it's been very selective. There's certain projects that will always be able to get money, and that's because of the quality of their well, not only the quality of the project and the resource, also the quality of the management team. And it'll eventually trickle down, but I think at this where we are right now at this juncture, I think it's been mainly the good projects that are the better projects or the advanced projects that are really seeing the money that anytime somebody needs money, I've seen many companies being able to fund themselves, but as you go down the scale, it's still not easy.
I totally agree, and it probably Victor had the same experience we did when we started. It was a pretty tight, close, knit set of investors who invested early on. It wasn't really big institutions, so I think in the market it's probably still the same way. If you're trying to get off the ground here, you still need those high net worth people who support you and bet on the jockey. And then you seem to get that money, then you need success relatively quickly, or else you can fade pretty quickly. So that hasn't changed yet. I mean, in every cycle there's a little bit of window of 18 months to 24 months where everyone gets funded, but certainly that isn't the market at the moment.
I mean, personally, I think that's a good thing. I think there was a lot of pretty poor projects, almost diverting money away from good projects because they shouted a little bit louder, and maybe that kind of the wind is blowing and the wheat from the chaff is happening. So I personally like it. Just in terms of you guys moving these projects forward, you're both kind of good for cash. I mean, Victor, you talk about funded through 2025. it's a case of then what scenario does that get you? How close does that get you to actually thinking about production?
Oh, it's a different. I mean, the way we're doing it is, or the way we've planned it is, there's there's basically two paths that we're going to be going on at the same time. One is getting a bulk sample done. The bulk sample, I'm going to be getting that. We're going to be trying to finance that with the least dilution possible. We definitely do not have those funds in our coffers right now. A bulk sample would end up, but you're actually bringing in the decline. This is not a bulk sample of an open pit here. You're actually you'll have a ramp in there. You're looking at anywhere from 30 to 30. Anyways, I'm not. You're looking at in that range, 30 to 35 million dollars. So we should be permitted. It would be 1 year construction in 2026, and the gold would be coming out, or the bulk sample will be coming out sometime in 2027. At the same time, we get a PA out. The PA is going to show what the PA is going to show. Is a toll milling for the first 4 years, and then the whole mine after that. The reason I want to do it that way is that as soon as I get my PA, I can do a feasibility study. A feasibility study, just toll milling, it gets done quite quick. Then I can start the permitting process. In Quebec, it'll take you approximately 2 years to do your EIA along with your BAP. So that would be ready. That would be ready sometime in 2028. But when that's ready, my decline is already in. It's not like I'm okay. Now I got permitted. Now I got to do construction again. And the third thing that we're going to do right after that is, again, will one of these majors producers let us get this far? But you need to have all the steps. You need to have all the steps forward. And sometime in 2028, the minute we get permitted for the toll milling, then we start the process of the process, all the permitting process for the entire mine after that. That means that includes your open pits, your tailings management facility, and your mill.
And do you think the market is used to that? So the North American market is used to that? Because that's a very Australian way of thinking about it. And like one of the first companies we kind of invested into back in the day, Rock's Gold, they started up with 400,000 ounces, 8 gram per ton, and off they went, and producing cash. But you put that in the North American context, it's like, do the investors understand that? Will they allow you to do that with a kind of, I guess, not an expanded resource in the context that they're used to? Do you think the world has changed?
This is no different than I'm sure we've all heard this in the past. When somebody has multiple open pits and they say, "Oh, I got a starter pit. I got a high grade starter pit." Well, I have a high grade. There's 831,000 ounces at 16 grams. That's what I have, and it's to put in a decline in there is basically $35 million. So that's the difference, and so it's not. The concept is not any different. It's just taking a different high grade zone that you're going to put into production, start cash flowing that, and then get into a real aggressive program. Again, it's really to try to limit dilution as much as possible.
And what type of money is attracted to that? Because obviously we've talked in the last few years about royalty streams and royalties and streaming, and what is the alternative financing available? Because there seems to be a lot less of the conventional funding around, or is there? Well,
the institutions, once you put together a plan on both that you're increasing the ounces and you're gonna your near cash flow, they do their numbers, and you got to make yourself look really really attractive to them, and that's what we're both trying to do, on increasing the ounces, and also, and in our case, trying to put this thing into production as quickly as possible.
So near-term cash flow is how you're showing a bit of ankle. And Dan, for you, obviously, you've got to keep that optionality going, because you can't be designing and building this for one potential buyer. You've got to make it appealing to all, standalone, etc. So how do you go about doing that with your 30 million in cash?
The focus at the moment on the new Oko discovery, obviously, and try and make that as big as possible, get a new MRE out. We have NDA signed with a number of companies. Obviously, we're trying to expand that universe via the bankers, and we think the Australians should be sticking their heads up. But we also know that the Chinese gold companies have been aggressive over the last 3 or 4 years, and we're certainly at the scale now where we think we would fit that. They've got a different style of how they go about that. they want to run a process and all that sort of structured form. So that'll be something we'll have to think about after the next MRE, is how do we want to run a process to basically extract the highest value for our shareholders, or the right value for our shareholders, the highest price. I guess the highest price is the right answer. You don't need a silly price, and you want to be able to sell. So because we're going down that pathway, we may end up in a structured process, but it will have companies definitely from the Middle Kingdom as well as the North Americans.
So, I mean, you've done the kind of spin-out model. There's a lot of similarities between the groups operating in the region. Do you think there's a kind of a district-scale development strategy, hub and spoke, where different companies can work with each other, or is your intent just to spin this out and move on to the next sort of, Explore Co model? How could it work in the region, is what I'm asking.
The biggest title holder of the district under option, as opposed, there's one larger than us down there, mid-scale miner. But no, we think you've obviously got the guys to the south of us who are storming ahead to build a mine. You've got Zijin, who bought the Aurora deposit in the north of the basin. They're 70 kilometres away. If neither of those is the end acquirer of us, our G2, then there'll be 3 mining companies in the district, and we will be the biggest exploration there. So, I mean, you've got 3 options then for your next discovery, and or someone else coming in. So, I mean, we think that we're getting enough momentum in Guyana now that it's not just, geez, there's no companies here, we've got to go find one, that which was Aurora last time. We think this time we will have a base of a mining industry, a modern mining industry, and we think Guyana is ripe for that. Yeah,
so I mean, I guess that kind of helps with any sort of technical, social hurdles that some conventionally one might, be concerned about. So that's the same for not just strategic partners, but any kind of investors looking into this thing, institutional. Do they consider this as a very mining friendly district? Is that when you've been trotting around in near Las Vegas? Are you getting any pushback on Guyana anymore?
Not really at all. I mean, with the oil down here with Exxon, obviously it's becoming investable. I mean, most North Americans now see it as a safe place to invest. With G Mining pushing the permitting as quickly as they have, and that follows on from what we did at Aurora 10 years ago, it's considered to be a very good mining jurisdiction, and it's almost up there with Quebec now, Victor. But and because Quebec's always been at the top, what everyone aspires to, and I think Guyana is certainly getting to that level now where people are comfortable that you can permit things quickly, that the government's very pro-mining, and that they have a vision in the future of a robust mining industry.
Right. Victor, I mean, for you, obviously, people talk about Quebec. We're going there next week. It's very mining friendly. No problems whatsoever. Is that right?
Well, I don't know about whatsoever. Follow the rules and you'll be okay.
Okay.
I mean, we're quite fortunate where we're located. So you're right off our core shack is actually in the town. Where we're gonna sink the ramp is actually 5 kilometers from the town. The electrical substation is 5 kilometers. It's like a triangle. Like it's 5 kilometers away from the city, or for the town of Normétal is 5 kilometers away from us. Like from Toronto or from Toronto or Montreal, you could just drive to the project. I know it's 7.5 hours it would still take you, but it's all on paved roads. It's right on the side of the road. And that's why like our capex wasn't really wasn't high on if you look at the last PA, that's because of all the infrastructure you have in the area. You've got electricity, you've got roads, you've got water, and what's important too is you have a workforce. The town of Lihir, which is 23 minutes away, the miners can actually go home at nighttime and not have to do a fly in, fly out 14 days in and out. So that really helps out. And the fact that there's rules, there's permitting rules, you just got to follow them. Considering, I like that. It's Guyana, yes, they've really advanced quite a bit. I know other people that have that have worked there. Look at the G Mining, for example. I mean, things are advancing. These guys would not put their money in there if they felt there was a risk.
Right, but just sticking with Quebec and more importantly your model, this kind of like swift movement to show near-term revenue. for you? Obviously, I think the market for the last 2-3 years has been sort of asking for that, and certainly rewarding people in the last 18 months for that. But you guys, do you feel that this is something that your management team can evolve into, being producers? Is that part of the end game as well as continuing with the exploration?
Absolutely. What's really important also, you got to think the town of Lihir is actually, this is where we're going to have good government backing. Again, you still need to follow all the rules. The town of Lihir is actually a logging city. It's a lumber town. With these tariff wars that are going on, the last time it happened when Trump was in power, Lihir got hurt hard. And here you can actually show them that there's jobs. They can actually get jobs in mining. And 3 years is really you could be in toll milling production by sometime in 2028. That would provide a lot of jobs for people that are worried about their jobs right now. It's a question of giving them hope. Can our management team move it forward? Absolutely. We're going to continue moving forward to bringing in mine builders. And who knows what happens, right? We're going to show we're going to build it, but if somebody comes in and takes it out, then they'll buy them. We'll move on to another one.
Right. Okay. And I guess in hindsight, looking back over the past couple of years, like obviously you've shot since 2024, Dan. You've really kind of shot out of the gate here. Do you think the market has been kind to you? Do you think how did you play it? Quite frankly,
I mean, like I said, a number of things happened which worked in our favour, like Anglo coming in. When G Mining took out Reunion, that was a big jump for us as well, because basically it's like, well, G Mining, you're going to build this thing. It takes all the doubt away of what's going to happen, and so all of a sudden that discount comes off, and then for us it was, we were drilling away, and we had another 1 million ounces last year, so yeah, that's fortuitous about the deposit, right? And then you put those numbers out. I think they're pretty robust. I mean, with its high grade, once again, as Victor talks, I mean, so it's always going to be a mine. The risk is, the gold price goes down, that thing's not a mine anymore. Whereas, our first resource we put out was at 9 grams a tonne, and the reason we did that, because our chairman's done a lot of work in Northern Ontario and started a place like Montreal, and he goes, well, when you put out your first resource, it has to be more than 1 million ounces and more than 8 grams a tonne, because 8 grams a tonne's a very good mine. So it's like, and it'll survive the cycle. So that basically, for that end, I think, people look at us and say, yeah, it's going to be a mine. You'd think someone will stick it together with the thing to the south of it, and it'll be an extremely large mine. And that will be a tier 1 asset if they ever come together. So I think there's eyeballs on that.
But what would you say that if there's one thing investors don't yet fully understand about your project, but you wish they did, what would that be, Dan?
I'd say basically as a standalone asset, it's a hell of a deposit. I mean, you look at the G Mining side, and they have got G Mining behind it, but you got 2.5 kilometres that's valued at $2.5 billion by an analyst. In the same company, they'll say, $250 an ounce. On the other side, so that's how you get to 600 million. So I don't think anyone values our asset as a standalone asset yet, and we've had a scoping study done by Mining Plus, which is internal, which I can't talk about, but we're not much far behind the G Mining side of the deposit, because we are 2.5 kilometres of strike and they're 2.5 kilometres of strike. We haven't drilled as deep. Ours is high grade, and grade does make more money, lowers your capex. So I think the concept that somehow we're an add-on to G Mining it has been the negative of all the other positives that have been brought on by that. And so that's what we're really trying to tell the story on now, that this is a standalone deposit. With the new discovery at North Oko, we think we'll surpass the size and the production profile of what's to the south of our border. So this year is quite seminal for us in that regard.
Right. So do you feel that you kind of got to, put out another resource update, but do you think that it would help the market? And like, you've done exceptionally well in 18 months, who are we to judge? But do you think that would help the market maybe better understand the scale of the economic scale of the opportunity as a standalone?
Yeah, I think so. And also with the analysts, when we talk to them, they're saying, we see this as a standalone. I suppose we should model it like you're going to build it yourself. And it's like, well, don't tell anyone that. But yeah, you should. You should say, here's the NAV. Yeah, discount down the shares for the dilution you're going to have to take, but give it a value as a standalone mine, which someone could mine themselves, which is absolutely the truth. So once the analysts start doing that, rather than writing nice things about us and saying, geez, it'd make a good tack on the G Mining, we need to get away from that with the analysts, and so that's the other edge of the sword of being next to G Mining, is that people think you're going to be the add-on, whereas in reality we see ourselves as a standalone asset, and with the new discovery we think it'll be something which we've been saying for a long time, that there should be a series of deposits along this trend. We're starting to show that, and that we really will have a great mining district out here, which we will have the major proportion of.
Interesting. And Victor, I'm going to ask you the same question, because obviously, like, I think, when you put out your PEA, I think there's a moment where you realise that maybe not everyone completely understood the potential of what you've got there. And I'm not sure whether you feel that you've been able to rotate out some of those people from your share register, or how you're going to play that. But I'll ask you the same questions. Again, what's the one thing, or maybe a couple of things, that investors don't fully understand about the project that you wish they did?
That it's a standalone mine with a low capex, highly. You look at the numbers that are in the PA. We've got a new one coming out. I think the biggest misunderstanding is that when we put out the first resource, is they probably thought that we had to spend another $100 million in drilling to get another 1.6 million ounces. The reality is that that's why we put out a PA as fast as possible, is saying, look, this is a mine. You can actually start producing with this, and you can continue exploring all you want with all the free cash flow after that. And again, we're not going to stop. We're not going to stop drilling. We're going to still continue drilling, but the focus is really to look at putting this project into production. And now it's like, show me the money. You think and it's really where we're located, right? That helps a lot, and also the style of deposit, and definitely gold definitely helps in this environment. And I'm hoping that when we do put out the new PA, it'll really be well understood that this is a highly profitable project.
Well, gentlemen, you two of my favourite projects have been for last 2 or 3 years, quite frankly, and not bad CEOs either. So I appreciate you coming on together. Slightly different models, but equally exciting projects. We will see you soon. I might even we're going to see you next week in Quebec, Victor. I think you're there. Dan, I think you've done enough travelling for the month?
No, I'm marketing for the next month, but I'm actually over in England, Matthew, but anyway.
Yeah, I think in markets like this, keep talking to people for sure. Gentlemen, appreciate your time. Fantastic projects, and we'll see you soon.
Great.
Yeah, thanks, Matthew. Thanks, Victor.
Thanks, Dan.